Debt. It's a word that often evokes fear and anxiety, but what if I told you that debt, when used strategically, could be your secret weapon for business growth? It's true. Debt can be a powerful tool, propelling your business to new heights. It's like having a jetpack strapped to your back, ready to launch you towards success. Think of it this way. Debt is simply leverage. It allows you to access capital that you wouldn't otherwise have, enabling you to invest in your business and accelerate your growth. The key is to use debt wisely and strategically, ensuring that it works for you, not against you. Imagine this. You're a budding entrepreneur with a fantastic business idea. You have a solid plan, a passionate team, and a market hungry for your product. But there's a catch. You need capital to get off the ground. This is where debt can be your game changer. By securing a business loan, you can access the funds you need to launch your vision into the real world. This injection of capital can be used for everything from product development and marketing to hiring key personnel and securing that perfect office space. Remember, smart debt can be the fuel that ignites your business engine. Now, let's talk about expansion. Every entrepreneur dreams of growing their business, reaching new customers, and expanding their market share. But expansion requires investment, and that's where debt can play a crucial role. Imagine you're running a successful bakery and you're ready to open a second location. You've found the perfect spot, but you need capital for renovations, new equipment, and initial operating expenses. Instead of slowly saving up, leveraging debt allows you to seize the opportunity now. By securing a loan, you can open your second location sooner, capitalize on the existing momentum of your business, and start generating revenue from 2 locations instead of 1. This is the power of leverage, using debt to accelerate your growth trajectory and achieve your expansion goals faster. Remember, debt isn't about getting rich quick. It's about strategic investment. Just like a farmer plants seeds to reap a future harvest, using debt wisely is about sowing the seeds of future growth and prosperity for your business. One of the smartest ways to utilize debt is by acquiring revenue-generating assets. These are assets that directly contribute to your bottom line by generating income or increasing efficiency. Think of it like this. You're not just taking on debt, you're investing in assets that will work hard for you, generating returns and fueling your growth. Let's say you're a trucking company looking to expand your fleet. Purchasing new trucks outright might require a significant upfront investment. However, by securing equipment financing, you can acquire those trucks and put them to work immediately, generating revenue and covering the loan payments. The same principle applies to other industries. Real estate investors use mortgages to acquire properties that generate rental income. Manufacturers use loans to purchase machinery that increases production capacity. The key takeaway is this. Debt, when used to acquire income-producing assets, can be a powerful engine for business growth and profitability. Slash your tax bill. The debt advantage. Believe it or not, debt can also be a valuable tool for minimizing your tax liability. That's right, used strategically, debt can actually help you keep more of your hard-earned money. One of the key tax advantages of debt is the deductibility of interest payments. For many businesses, the interest paid on business loans is tax deductible, which means you can reduce your taxable income and lower your overall tax burden. Depreciation is another significant tax benefit associated with debt-financed assets. When you purchase an asset like equipment or real estate, you can depreciate its value over time, deducting a portion of the cost each year as a business expense. This depreciation expense reduces your taxable income, leading to potential tax savings. Remember, tax laws can be complex and vary depending on your location and specific circumstances. It's crucial to consult with a qualified tax professional to ensure you're maximizing the tax advantages of debt for your business. Mastering debt strategies for success. Now, before you rush out and start racking up debt, it's crucial to understand that responsible debt management is key. Just like any powerful tool, debt needs to be handled with care and strategy to avoid potential pitfalls. One of the most important aspects of debt management is maintaining a healthy debt-to-equity ratio. This ratio compares your total debt to the amount of equity you have in your business. A healthy ratio demonstrates to lenders that your business is financially sound and capable of managing its debt obligations. Another key strategy is to shop around for the most favorable interest rates and loan terms. Don't settle for the first loan offer you receive. Take the time to compare rates, terms, and fees from different lenders to ensure you're getting the best possible deal. Refinancing is another powerful tool in your debt management arsenal. As your business grows and your creditworthiness improves, you may be able to refinance your existing loans at lower interest rates, reducing your monthly payments and saving you money in the long run. Remember, managing debt effectively is like staying one step ahead in a game of chess, always thinking strategically and making moves that benefit your business in the long run. Real-world success, debt in action. Let's bring this all together with some real-world examples of how debt can be a catalyst for business growth. Real estate mogul. Imagine a young entrepreneur who used a mortgage to purchase a small apartment building. The rental income from the property covered the mortgage payments, and as the property appreciated in value, the entrepreneur was able to leverage that equity to secure additional loans, acquire more properties, and build a thriving real estate empire. Expanding bakery. Remember the bakery owner who wanted to open a second location? By securing a business loan, they were able to expand their operations, double their production capacity, and reach a wider customer base, ultimately increasing their revenue and profitability. Equipment upgrade. A manufacturing company struggling to keep up with demand decided to invest in new, state-of-the-art equipment. They secured an equipment financing loan, which allowed them to acquire the necessary machinery without depleting their cash reserves. The result? Increased production capacity, faster turnaround times, and a significant boost in revenue. These examples showcase how debt, when used strategically, can be the key to unlocking business growth, expansion, and financial success. Remember, debt itself is not the enemy. It's the lack of knowledge and strategic thinking that can turn it into a burden. By understanding the power of leverage, managing debt responsibly, and utilizing it as a tool for growth, you can harness its potential to propel your business towards a brighter, more prosperous future. Be the greatest you can be. Join us. Click the link below for short, sharp, simple video courses that give you confidence and street-smart business skills to simplify accounting and focus on growing your business to succeed.